Let's take a look at the weekend auction results. And I've got to tell you, they were a little lower than they have been in recent weeks. Around Australia, 1,289 auctions. The clearance rate, 61.8%, so just a little off. In Sydney, 478 auctions. The clearance rate here, again, probably fairly steady, 63.6%. In Melbourne, watch this, 447 auctions. The clearance rate has fallen there, just below 63%. Melbourne, 94 auctions. That's kind of busy for Brisbane. The clearance rate there, more than 60%. In Adelaide, just 40 auctions. The clearance rate's stronger here, 72.5%. And in Canberra, 43 auctions. The clearance rate was the best of the weekend at 76.7%. So let's bring in here REA Group's senior economist, Paul Ryan. Paul, I mean, we've been talking about what Victoria wants to do in terms of freezing rents. And clearly property investors, as we've heard, are not happy about this. But just give me a sense of the market right now and where it sits, especially with rents that have gone so strongly over the past 12 or 18 months or so.
I think the data's showing that we're starting to see the rental market heal. So we've seen rents grow really, really strongly as available rentals have pulled back. And now we're seeing we're seeing more investors coming into the market in investor finance figures. We're still seeing investors sell out of the market at high rates. But really the difference there, the number of new rental properties coming to the market, is getting back to where we saw before the pandemic.
Okay, so it's classic supply and demand. So if you've got a supply of housing coming in, but what about the construction crisis? I thought that was meaning that there were fewer properties being built. Where are these properties coming from?
Yeah, exactly. So we are seeing investors come into the market, and that's mostly at the expense of first home buyers. We saw first home buyers come into the market hugely throughout the pandemic. So the balance has shifted back now towards, roughly about a third of credit going to investors again, which is what we saw before the pandemic.
But I would have thought that first home buyers, with these enormous increases in rent, notwithstanding the increase in interest rates, would have been looking at the buying market and saying, well, the maths must almost tip us towards buying a property as compared with continuing with these sky-high rents.
And I think what that shows is that these higher interest rates are biting on first-home buyers more than on investors. Investors tend to have more wealth, can kind of weather that storm a bit more. So while investors may see poor cash flow returns in the short term, these really high rents that are going to keep growing strongly, investors can see kind of the end of that and see that it's going to be a good investment.
Okay, so that's the thing, because they can see, A, construction shortage,
exactly.
B, they can see a rise in population. So even though people might think that housing right now is relatively unaffordable compared with wages, it doesn't matter because it's still supply and demand.
Yeah, exactly right. You can see, investors can see the future. They see that rents are going to keep going strongly. Demand for Australian property remains really strong. That's been the real surprising thing over 2023 so far. Prices are rising even though interest rates are higher because demand is so strong.
Now, there's been anecdotal evidence that there's more increased investment in Australia from Chinese buyers. Now, the one thing we know is when Chinese students come to Australia, parents often will buy a property to go with it. So that's also competition that's actually helping to solidify the housing markets right now.
Yeah, I think it's hard to get data on those kind of purchases, but we have seen a bit of a increase in the types of properties that you think that overseas buyers might demand. Inner city units, for example, they're historically very cheap at the moment. So whether that's investors sensing value or, those traditional demand sources coming back, either way, we're seeing, again, the market is rebalancing back towards that pre-pandemic level.
So this means it also goes to that whole issue of immigration. When you have more migration coming into your country, quite clearly there is going to be a demand for housing. Doesn't matter whether it's rental or for people buying properties or for investment properties. There is always going to be a demand, and that drives all of those values at some stage.
Yeah, absolutely. That's been one big source of demand for property. The other big demand source we've seen is how households have reorganised themselves since the pandemic and moving into bigger homes, bigger households. That's put a lot of strain on the rental market. Remember, the rental market started to get tight a lot earlier than borders opened. So we know that this isn't just an immigration shock. It is also just a pandemic-related effect.
And just very quickly, this also then goes to constructors, investors, and those people who might build on spec, which there's not very many of them around right now. At some point, the dynamics must lead to a recovery of the construction sector.
That's what we're hoping. At the moment, the kind of relative low levels of investment, the high construction costs mean that we're not getting that construction pipeline coming through. And we need that to build more homes, to supply homes to that really strong demand we've seen.
Paul Ryan from REA Group, always great to chat to you. Many thanks for your time today.
Thank you very much.